How we doing, guys? Been a while since I made a video. Just been busy with my own trading and just enjoying life over the past few months. But I had an idea for this video, and this kind of came up when I was chatting with a couple other traders. And one of the main struggles I found is a lot of traders don't necessarily have psychology problems, but what they do lack is the ability to spot good probability trades in the market. So what does a good trade look like? How do you find it? That's kind of what we're going to talk about today. And I'm going to go over my 3 steps that I take in order to identify a high probability setup. And we're going to go into that right now. So the first step I look for here is identifying the market structure. Now this is very crucial because if you don't know what the market structure is telling you, you basically are trading blind and you're going to be, shooting from the hip. So what is market structure basically? It's going to tell you whether the market is trending in a bullish trend or in a bearish trend, or whether the market is in a range and rotating back and forth, which we call balanced. So let's look at the chart here, and let's look at the daily time frame to start with. I always like to start with a larger time frame just to get a bigger picture of what's going on. And from my perspective, we can clearly see we're bullish right now. Over the last few months, we've been setting higher lows, and higher lows, right? So we got this higher low here, this higher low here, and this higher low right here. And then recently we have this higher low. So what this is telling me is, yes, we are bullish on the macro. We are leaning more towards bullish, but what we also notice is that this level here has been acting as resistance. So we've been unable to set higher highs. We've been able to set higher lows so far, but every time we set a higher high, the market fails. Tries to go for a higher high, fails. Tries, fails. So now we're in a very interesting spot because the market could potentially flip to bullish structure on the larger time frames, such as the weekly. But that's going to be, we're not here to predict, right? We're here to just see what the market's telling us right now. So in this case, right now, I can say that the market has a bullish structure. It is somewhat balanced, you can say, yes, because we are, kind of in this range here, this 4,200. We see this level, and then we see, let's get rid of these lines actually. We can see this level here, and then we can see this level here. Kind of seems like we're kind of balanced, right? But I am leaning more towards the bullish because we have been on the weekly and then the larger time frames, we have been setting higher lows. So I'm going to lean more towards bullish until we set a lower low, which would be the break of this level over here. So knowing that, what we can do now is take that kind of context and let's get these lines out, and we can go down to a smaller time frame, so the 4-hour time frame now. And I love the 4-hour time frame because it's kind of in the middle ground between the larger time frames and then the smaller time frames, and it gives me a really clear picture of, as a day trader, of what has been happening recently. So I'm not too interested in what's happened over the last several months. I'm more concerned over the last few weeks, last few days, because as a day trader, we're just focused on capturing intraday moves, and that's more focused on the smaller time frames. But it still really helps to get the context on these larger time frames, which is why it's really nice to look at them. So here we can see on the 4 hours, same kind of idea, right? We are technically bullish here. If you look at this chart, it's undeniably a bullish looking chart, right? We are setting higher lows, higher lows. We temporarily broke down here, but they immediately reclaimed. We failed to make the higher highs there. We failed to hold, came back down after this FOMC announcement. But as you can see, the bulls defended this level. They broke down, but they couldn't sustain it, and then the bulls just protected it and rallied right back. So to me, looking at this structure going into the next day, I'm going to be focused on the bullish side, right? Because I know that the overall picture right now is bulls are technically in control, right? I'm not going to let my bias get in the way. I'm just going to look objectively at the chart and determine whether it is currently a bullish structure or bearish, right? So now let's jump into the smaller time frame, and we can get an even closer look. So now that we look at this smaller 30-minute time frame, things look a little bit different now, right? So over the past few days, you can kind of see this actually kind of looks bearish now, right? We see this big drop here, pop, failed, dropped again. As we're popping into this level again here, we possibly could fail again. We don't know. Again, we're not here to determine or predict the market. We're just reacting to what we see. But from this point here, I cannot tell if we're going to turn bullish and squeeze above these levels, or if we're going to reject here and come back down and then break this level here. So right now, in my opinion, this is kind of, no man's land. I need to see what's going to happen next in order to determine the structure. So let's drop down to an even smaller time frame now. We go to the 15-minute. Okay, now we're getting more in the territory of kind of what day traders look at, right? As day traders, we look at, the 5-minute, the 2-minute, the 15-minute, those kind of time frames. And I personally really like the 15-minute because it gives you a nice picture. It's not too much noise and kind of establishes the trend really well, especially intraday. Now, intraday on Friday, this day here, we can clearly see this was obviously a bullish trend, right? And that's easy to see in hindsight. But how do you see this in real time? Well, let's zoom in even more. Go down to the 5-minute chart. So this was basically the action from Friday. We opened right around 8:30 here. Yes. So this is the 9:30 open. Ignore that timestamp. It's about an hour behind. But we had the open here, and right out of the gates, we pushed up, right? Pushed up, higher low, pushed up, higher low, pushed up, and then kind of grinded down, and then we pushed up again into the afternoon. So I'm going to actually go over a trade I took on Friday with you guys just a little bit later. But now that you kind of have an idea of what to look for in terms of market structure, let's go on to the next point, which is identifying key levels. So key levels are, going to be your best friend in trading, right? And when it comes down to technical analysis, key levels are going to be basically where you're basing your entries off. So how do we find key levels? Once again, we go back here, we look at the larger time frames to start. So if we go back to the daily chart here, we can obviously see some larger key levels on the daily chart, and we can draw some lines here. So we clearly got this kind of 4,200 area. It's been rejecting for a very long time, and we got this kind of 3,800 area, right? So these are kind of the macro levels right now, the key levels, but we're not really too interested in these levels as day traders, right? Because I can't make a trade based off a risk that's, 200 points away or, 100 points away. I need to look at the smaller time frames and get a better idea of what's more key for my style of trading, which is day trading. So we drop down now to the 4-hour, and now we get a little bit of a better picture here, right? So let's draw some more lines here. So now we see that this level was key, and they actually broke down. The bears took it out, but as you can see, the bulls relentlessly reclaimed it. Once again, the bears tried to take it out. We reclaimed it. So we can also draw a level here now. As we can see, the bulls defended this level, this kind of general area, this 4070-ish. And so now what do we see if we go down to the smaller time frames? Let's go down to the hourly. Okay, so now things are getting more interesting for us day traders, right? So now I see this very key level right here, and I'm just going to draw a line here. So this is a very key level for me because this was the high of the FOMC announcement, and I know that using this level, I can know that there's a lot of short sellers that are going to have their stops above this level, and also a lot of longs are going to be buying this breakout over this high. So knowing this, I see that we're close to a resistance level. I see we're close to you can call it supply, resistance, whatever you want to call it. But we are close to a level where aggressive sellers were hitting the market. You can see that here. They came back up. They reacted again here. Now we're coming back up to it. And if I had to guess, again, we're not in the game of predicting. We're just trading what we're seeing. But if I had to guess, seeing as the bulls have tested this level and they're testing it again, I would guess they're going to probably try to hold a higher low here and then rip through this level and go for those new highs around the 4,200 area. But that's just speculation, right? What are we seeing on the chart right now is the bulls are in the short term, they're in control, right? In the short term here on the hourly chart, they've defended this level. And what I see here now is we're kind of in a range. We have this kind of range rotation now where we're kind of testing this 4,200. We're coming back down this, 4050, 4060, coming back up, So in between this range right now, what I can say is it's going to be kind of difficult to find an edge. But the best edge would be kind of trading towards the upper end. So we got the key level up at 4,200. and then towards this lower end around 4070s, roughly around here. So knowing these key levels, let's drop down to an even smaller time frame. All right, so now on the 30-minute, I can draw some even more lines here. So now we got this very key level here where the market actually rallied pretty aggressively on Friday after it held this level. So we know this level is going to be very key moving forward throughout this next week. And judging by this, what we can assume is that the bulls, showing the aggression from the bulls here, their objective is probably going to be to take out this high over here if they manage to hold a higher low above this level, above this candle right here, right? So if we come down, we hold a higher low anywhere above this candle, I'm going to assume, based off what the price action is telling me, that the bulls are going to want to take out this supply level, this resistance level, and they're going to want to head back up to this 4200 level. So knowing this context now, we've kind of gone through the levels, we've kind of gone through the structure market. I want to now go over a trade I took on Friday and kind of give you guys an idea of how I used all this context to put together a nice trade. And then we're going to also talk about the entry setups that I use intraday in order to actually execute my plan. So let's go down to the 5-minute chart now. All right, so knowing that the market was bullish here, I was not participating in the market open. I personally don't like to trade the open. I think it's kind of a gamble in my opinion. So I kind of just let the market do its thing for the first 15 to 30 minutes. And what I could see here is very clearly the bulls were in control. And if we go down to even smaller time frame here on the 2-minute, you can clearly see right from the open here. So right from the open, we shot up and we never really looked back, right? Just kind of set higher highs, higher lows, higher highs, higher lows, higher high. And then, so this is where I started to get interested in the trade right here. So once we kind of started to consolidate in this little range here, so we saw this range here, this is where I was getting interested in potentially getting in on a long. So what my analysis was telling me was that, okay, we're in a bullish structure, we're in a bullish trend. I'm not interested in shorting this market, unless the structure kind of shifts and turns around, or unless we run into a very key level, which we just discussed. So that would be kind of over this, 4160s, 4170s. Then I'd be interested in shorting. But for now, I'm going to look for a bullish entry. And what I know for now is this market is a little bit extended. I don't want to really be buying without a pullback. So I was looking at it when it made this new high over here. And what I thought is, okay, I'm obviously not interested in buying up here. I want to see a pullback because as we know, big pullbacks are where the larger participants, the big banks, that's where they like to get in their positions. They do not want to buy high. They want to buy low and sell high to the retail traders. So knowing that, going in with that mentality, I said, okay, I want to see a pullback and I want to see this kind of level hold, this 40-30. So we kind of have this level here. I want to see this 40-30 hold. And what I was seeing here is, as you can see here, it kept bouncing off this 32, 32. They kind of broke a little bit here, but they still held that 30. So I kind of got interested in the long trade. And what I did is I took a long somewhere over here around 34, I believe 34 or 35. And I was risking this 30 level. So what I saw here was, I got in, the market was still in the balanced range. And what I noticed was the market was really still consolidating and it was really struggling to find buyers, enough aggressive buyers. And then I eventually ended up stopping out here and I took a loss for just a small loss there. But what I noticed here is that after we broke this 40-30 level, notice the aggressive buying that came right after. Now, if we go back, let's go to a 5-minute chart here. Now, if we look at it on a 5-minute chart here, when you see a breakout like this, so you see the bears coming in, they're selling, this is not ideal if you're a bear, right? You do not want to see the price break a level and then immediately reclaim it like this. That shows signs that there's a very large institutional buyer, not only defending the position, but also trying to trap retail sellers into this move. So what happened here is longs got stopped out, including myself. I gave it a shot here. I took a small stop. And what happens is shorts get aggressive here, the retail shorts, and they actually short into this move, assuming the price is going to drop down and fall back down to the lows here. But what they don't understand is the market structure, right? what did we talk about earlier? We're in a bullish structure. We don't want to be sellers until the structure shifts. And knowing that, what we're going to look for is these trap entries. So this is where number 3 comes in. I'm going to pull it up now. And this is where the entry setups come in. So, you know, you kind of got 4 different entries you can take. You got the reversals off the highs or off the lows. You got pullback entries, so you're joining the trend. You've got breakouts where you're buying key level breaks. And then you got your traps. And this is probably my personal favorite entry setup, because this gives me the most confidence to know that I have traders on the wrong side of my trade, and it is much more likely to work and have some steam behind it. And as we see here, go back to this chart, this trade had a very nice amount of steam. So I got in right as we reclaimed this 30 level. I got in around 32, I believe, 32.50. So 41.32.50 entry. My risk was down at 27, so about 5 points of risk, which is pretty average. And my target was going to be this new high, so break over this 42 level. And I was going to scale out, so scale out over this high. And then my next target was going to be just around 41.50. And if we zoom out here, I'll show you guys kind of what I was looking at. So I was interested in scaling out into this kind of area here. As you can see, there was, quite a bit of, as you can call it, supply here. So this is where aggressive sellers were hitting the market. And I didn't want to take a risk, so I wanted to scale out before we kind of got to these highs. And what I did was I scaled out before that 50 level hit. So I scaled some out once we broke the high here over 42. I sold some at 44 here in this candle. And then I scaled the rest out just over here. And in hindsight, yes, I could have probably waited for my 50 target and would have sold the rest here. But this is hindsight trading, so all you can do is follow your rules, right? But going over this trade, just to show you guys, I mean, that was a 5-point risk to make nearly 15 points. So, you're making 3R, you're making 3 times your risk. That's a fantastic trade. And in my opinion, if you're going for 2 times your risk, at least, that's pretty solid. But typically try to go for those 3 times or more. That'll allow you to have a much lower hit rate in trading, and you can still make money. So you can be wrong, like 60% of the time, and you can still make money with a 3R win rate, or sorry, a 3R risk to reward. And that was the trade. So let's just go over, quickly summarize, what we looked at here. So basically what I do first is identify the market structure. Are we bullish? Are we bearish? And again, we are day traders, so we are not too concerned about, the weekly time frame and all that, the larger time frames, but it's good to be aware of them, as I discussed earlier. And, whether in range rotation or trending, that's going to determine how I trade for that day. Let's just go over to the chart one more time, and I just want to go over some range example for you guys, just to show you guys kind of how to trade a range, because I know many of you guys struggle with ranges. Most traders like breakouts and they like continuation, but as we can see from this price action here, we had very balanced range action here, right? We had these kind of lows, these kind of highs. It was very difficult to get follow through for several days here. And the best way to trade these, of course, in hindsight, it's easy to say this, but the best way to trade these is selling high and buying low. And how do we do that safely? How do we know that there's going to be a low? Well, again, you go back to my entries, the entry setups here, and this is my favorite setup, the traps. So how do you trap traders? It's simple. You wait for a low and a high to be established, and you recognize the structure is range bound, so you recognize we're in a range market. And then what you do is you wait for that low or that high to get taken out. So for example, we got this right here, this example. We took out this level right there. We took that out, looked at that just by a few ticks, and then they reversed it right back up to the upper end of the range, right? And then look what happened again. We took it out again just by a few ticks, took this level out, and we reversed right back to this high, and we took this high out by just a few ticks, right? So you can kind of just keep repeating that and waiting for those, I like to call them liquidity grabs. So that's when the market kind of shakes people out, shakes out the shorts, it shakes out the longs, and you can really take advantage of those trap setups. Wait for that, you wait for those retail stops to get taken, and then you enter your position. that gives you much more confidence knowing you're not the target, right? You're not the target for liquidity since other retail traders already got taken out of their positions. So that's just a way to trade the range rotation. Just a quick overview there. But going back to the summary here. So the structure is key. Identify what you're trading. If you don't know what you're trading, you're going to have a really hard time with your entries. Next is key levels. Again, identifying those key levels. You can use trend lines. You can use your 90 MAs. Whatever you like to use, but try to establish those key trends and those key levels. Whether we're in a range, as we mentioned earlier, this will really help you determine how you're going to trade that current day based off this context, whether we're trending or ranging. And then the entry setups, they're really simple, right? So you can get those reversals off the highs or off the lows. You can get pullback entries. If you're in a bear trend, you can get those, lower highs, shorts. So just kind of like what we see here, big move down, boom, lower high here on the bigger time frame, lower high, sell down, lower high, sell down, So you just want to join that trend until that structure shifts, right? So once this level kind of broke out over here, I'm no longer bearish because this is a lower high that made a new low here, right over here. And we came back and broke over this level. So I'm no longer bearish after this happened. This is where my bias switches to bullish, and then I target the next key supply or key resistance level because that's how the market moves. The market is constantly rotating from supply to demand, from support to resistance. All you have to do is identify where it's heading by looking at the market structure and what it's telling you, and identify your targets. So you see the key support or key resistance areas, and from there, trading becomes much easier. So hope that video helped you guys kind of just simplify your trading a little bit more. In case you're struggling with finding good entries or finding what a good trade looks like, start with this as a foundation, and then you can incorporate this into whatever system you trade. So you're going to have your own personalized system for how you trade, and everyone's different. There's not going to be one single trader that has the exact same method. But if you go over these 3 steps, essentially, every one of us is looking for these 3 things, right? We're looking for where the market is likely to head, how it's trading, right? Is it trending? Is it range bound? We're looking for key levels on the chart for our entries or our targets. And then we're also looking for entry setups. How are we going to enter our trades? And this is what gives us confirmation, right? Some additional tools here you can use. If some of you are familiar with this, you can look at tools such as Bookmap. So it's a volume profile tool. It's a market depth tool. This can give you a big edge in the market. I'd consider looking into that if you're, if you're looking to kind of up your edge in the market a little bit. Also, you got Sierra charts. Also very great volume profile charting tools. And then you got, your classic footprint charts. So footprint charts will just give you a little bit more data rather than just candlestick charts, and they'll kind of show you the order flow a little bit more. But that's a little bit more advanced, and once you get into your more advanced into your trading, then you can kind of look into these things. But for now, just focus on the basics. The market structure, key levels, and then your basic entry setups, and that'll really help simplify your trading. So that's it for the video, guys. Hope you found some value in it, and we'll see you in the next one. All right, take care.